Good morning, traders. It is Monday, the 17th of August, 2015. It's 8:01 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. A couple of news items overnight. Europe spent most of its session sideways to slightly higher, with attention shifting to Greece. Asian markets were mixed, with Chinese devaluation effects abating and focuses on monetary policy going forward. A strong reaction lower came in with the 7:30 U.S. Empire manufacturing figure. Strong miss, which resulted in most indices dropping, including in Europe. I think the DAX had about 100 and something point move. Empire Manufacturing came in at negative 14.9 versus 4.5 estimated. That's a positive 4.5, and it came in at negative 14.9. So it missed by quite far, about 19 points. This is the lowest it's been since April of 2009. Oil continues to fall as it makes new long-term lows. The low overnight was $41.64 in the current contract. The U.S. dollar is higher versus the pound, yen, and euro. And then finally, the Euro Group are considering extending maturities on Greece debt to an average of 60 years for repayment. The Euro Group's also considering has also approved the aid package of around 85 billion euros. Bank of England's Forbes says the need to hike interest rates should occur well before inflation hits 2%. Waiting too long would risk undermining the recovery. Looking ahead at today, the key figures to be expected today: 9 o'clock, we have a U.S. NAHB housing market index expecting 61 for August, and then at 3 Central, all times are Central, around 3 Central, we're expecting U.S. total net tick flows and net long-term tick flows as well. That's at 3 o'clock Central 4 Eastern. And looking at other events, it's pretty clear. And given that it's Monday, I'll quickly run through what's important for the week. Tomorrow, we have U.S. building permits and housing starts. On Wednesday, we have Eurozone current account, U.S. CPI, U.S. crude oil. On Thursday, we have German PPI, UK retail sales, U.S. Philly Fed, existing home sales leading index, and then we have Kosher Lakota, Williams, and Nowotny speaking. And also after the market, we expect Hewlett Packard's earnings report. So Thursday looks pretty busy. Friday, we get German consumer confidence overnight, at least overnight Chicago time, U.S. manufacturing PMI, Eurozone consumer confidence, and this is also expiration Friday. It is the third Friday of the month. So let's switch gears here to our charts. Looking at Friday's action, I was not here on Friday. I was traveling. But last week I talked about the idea that once we get over the 80 and we start to push through on this return up, the expectation is for a test of 93.75, which is the most traded price since this balance zone started. Again, I keep talking about the same date, February 13th. We've been stuck in the same range for a long time. But that's our most valuable price, 93.75. So we're looking for a return there. We expect this to be tested from below again. Very clear rejection of the 46.50 and so on since last Wednesday's rally. So you can see here Wednesday opened, pushed down, very clear excess low put in on a daily. This chart again is a daily chart of the regular trading hours or the pit hours. And that day, after rejecting 46.50 and crossing the open, it closed near highs for a trend day. The next day, as expected, which was Thursday, we had a rest day Not much happened. A very big doji there. And then on Friday, we open a little bit lower and we finish on highs. As we head into that, we were just 4 points short of the 93.75 area. You can see the 93.75, a very prominent high volume node right here. And Friday got stuck, got tied up in the LVN here at 89.75, 89.50, where the market just paused. On Thursday, we had an interesting run, a very decent push up, a pullback right to the initial balance. This is pretty common, and then it pushed back up and it put in a double top by a tick. It missed by a tick and it closed lower, leaving this this double top behind, defying the statistic of a double top not remaining in place by the end of the session more often than not. And so we expect a break of this at some point, and that's what we got on Friday. The day before, we did the same thing. We missed the high by a tick on a double top, and then of course the overnight session took that out. We ended up with an overnight session that pushed up here. It came back, and then we finally broke it the next day. So that that particular setup is continues to hold up. And then today, or Friday, we shifted the point of control up near the close to what looks like a very sharp point of control and value zone, or high volume node near the high. This basically outlines, given the structure that we have here, this outlines a continuation of the trend up, and it did continue to 94.50 overnight, taking out that 93.75 by 3 ticks before we rolled over and pushed down, and now we're trading at 82.25, based again on that Empire Manufacturing miss, the big Empire Manufacturing miss. But Friday looks like a very methodical trade, double distribution, with the market being stuck right now right against the high volume node of this distribution, right? So what's happened since Friday, and I'll pull up the overnight session in a minute. What's happened since Friday is that it has it finished up high. It did its tests overnight all the way up to 94.50, and it's rolled over. Once it takes over the LVN, the expectation is that it goes to the next high volume node, which is where we are right here. The high volume node's right at 82.25. And that's basically where we are now. So the market's back in equilibrium. Overall, we are in this balance zone and holding it together right in this box here. What this tells us is that it's most likely to be a pretty balanced open, meaning short-term traders in control likely early on. I expect a test of this LVN at 85.75, 86. If the LVN is not taken, then I expect this to start to rotate back down and test prices below. If the LVN is taken, I expect it to come back to the LVN, retest, take over the point of control, close the gap, and aim for 93.75 on the day session again. And those are the two key hypotheses for today. But let's take a look at the overnight session real quick. So here's what we've got overnight. You could see that we opened at the, even though we had a break over the weekend, we opened right where we closed, nothing to factor in. The market tested both sides, an early LVN test overnight, and then it started to drift up. But look at what it's doing as it's drifting up. The delta is shifting down and is sideways. As it drifts up into the 94.50, really the participants are not lifting. There's no aggressive buying in volume to back up the aggressive buying in price, and then we roll over with this Empire Manufacturing figure, and we end up with an LVN, and a very sharp HVN, which is almost the opposite of what we had on Friday. And this HVN is being built right up against the most accepted price on Friday for most of the session until the close. So this tells me that the market's in balance, even though we have this funky looking profile on the overnight. It's pretty much the opposite of what we had on Friday. But overall, the market's settling in right into the balance area right here. This is most likely going to lead to chop. And again, the primary hypothesis for today is a choppy open, given that we are in value in range against the lower distribution high volume node. The expectation is for a test at some point of the 86. A failed test would kick in the primary hypothesis, which is likely to push us lower and keep us in balance, keep us in this zone here, in this big zone, and chop around. So an inside day most likely, unless there's news. The second hypo is it does bounce around a little bit. It gets to this point, this LVN, takes it over, pulls back to it, chops around, takes out the point of control, the closing price of Friday, and walks itself 90 to 93.75. That's hypo 2. Hypo 1 is for it to stay down below. Those are the two key and highest probable plays for today. The third play is clearly to break up high and then fail and then move lower, and then also another hypo is for it to just be stuck here and just to go sideways and do nothing, although the range here doesn't support it doing nothing. In any case, that's how things are shaping up. A quick scan of the market. I want to show you how big a move the DAX had here. So you can see on Empire Manufacturing right here, the number got triggered, and this thing dropped 100 points basically in no time and is sitting sideways. Overall, the DAX has been drifting lower, and so has the Euro stock. So Europe's quite heavy at the moment. After testing the prices up high, it's been sitting sideways. So I've been talking about, at least in our Eurex room at stage 5, I think, been talking about this test of 36.75, and we got it last week or the week before, and it's been sitting sideways, and then we finally drop over, and we're sitting sideways, and I expect a continuation. It looks like it's already on its way. 34.59 is the next level to test, and we have closed that point of control. If we don't hold these prices, then 33.57 is likely to be next. So Europe's on a downswing, and that's likely to weigh on us as well here in the U.S. Anyway, one last thing. My time is up. One last thing. There's a public Ask a Question session tomorrow. It's an AMA, Ask Me Anything, same thing. There's a public one going on tomorrow. It'll take place at noon. And the link for it will be posted on Twitter. It'll also be posted on tomorrow morning's video. If you have any questions or if you just want to listen in during the trading day over lunch, you're welcome to do so. But again, there's an AAQ tomorrow. And then also, I just want to advise you that I'm actually taking some time off. I'm traveling from Wednesday through to the 31st of August, so there will not be any trader bites or anything going on during that time. Again, AAQ tomorrow at noon Central, 1 Eastern, and I'll be traveling starting Wednesday and will be gone till the 31st. Okay? Thanks for tuning in. Take care.